Good evening, everybody. I'm so used to saying morning. This is so weird. So thank you for joining us for our first evening Facebook Live. Tonight we'll be bringing you Understanding Credit. Back in March, we did a budgeting one. That video is still out there. If you're interested in it, it is the 6 steps to building your budget. Please check that out. My name is Tracy Dickey, and I am a certified financial educator and a community engagement specialist with Together Credit Union. And tonight I brought along a special guest. Miss Kayla, you want to come over here and wave?
Hi, everyone. Great to be with you this evening.
This is Kayla. She's my coworker. She's been with the credit union 9 years now. She's a community engagement specialist as well, and also certified financial educator. I have been with the credit union for about 7.5 years now, and our job primarily is to teach financial education to our members and in our communities, and something we're very passionate about. And luckily tonight, I'll be teaching you guys about one of my favorite subjects, credit. And we're going to go ahead and get started because we want to be timely with this and make sure you guys can get onto your evenings. There we go. Understanding your credit score. So tonight, what we're going to go over is we're going to define credit. We're going to go over the 3 credit bureaus. We're going to go over how they calculate your credit score, what to look for when you're reading your report, establishing and maintaining that credit, and then Kayla's going to come in here and talk about some great resources and tools that we have for you guys. So to get started, what is credit? Now, my favorite thing is when I'm teaching high schoolers, young adults, I always ask them, when we get to credit, they always want to know about it because they don't always learn it in school. But when I ask them, when you hear the word credit, what do you think? All the responses are negative. It's negative, it's debt, it's, they just never have a really positive response. And this is why I'm here to teach you guys. Credit is a good thing. Credit is great. And you just have to learn about it and know how it works. And then you can start on that financial path. So credit, all credit is simply is just your financial power. It allows you to get those items you need now, but based on your promise that you're going to pay later. So a lot of us, when we think about it, we don't have $15,000, $20,000 laying around just to purchase a new or used car when we need it. We don't have that hundreds of thousands of dollars laying around to purchase that new house when we need it. So we have to rely on borrowing the money from a bank or credit union, hopefully Together Credit Union. So we have to borrow that money. Well, to borrow that money, you have to have a credit file and a credit rating, and you have to build that up. But not only for loans do you have to have credit. Anymore in this day and age, future employers also now check your credit as part of your background checks. If you purchase a car, you purchase a house, when you rent an apartment, you better believe that your landlord is going to be pulling your credit, and they're going to be checking your history with that as well. And also for future purchases. So once you buy that house, you're going to need new furniture, TVs, appliances, all those can be financed. If you have like any big landscaping projects, remodel projects you want to refinance, TVs, tablets, computers, stuff for college, you can finance those too. So that's why finance and credit is so important in the financial world. So there's 3 main credit bureaus. They're Experian, Equifax, and TransUnion. And each credit bureau reports and scores a little differently. Reports are updated about every 30 days. So with these credit bureaus, the question I always get is, why is my score different between all 3 of the bureaus? The information should be fairly the same, but there is a reason that they might be separate. And a big one is a lot of times when you go and when you borrow money to get a loan, that lender might not pull from all 3 of those bureaus at the same time. They probably only use 1, maybe 2 of the bureaus to get their information. So not all the bureaus are going to have the updated information at the same time. You're not accessing your score at the same time. You might just be accessing 1 or 2. Also, if your credit bureaus, if they don't have all the information reported at the same time, that also could have a difference in your score. It depends on the lender. The credit bureaus get their information from the collection agencies, court records, and the lenders themselves. So it depends on what information they're getting from those guys of what they can report. So if their information isn't up to date, it's not going to reflect that on your credit report. You may have applied for credit under a different name. Let's use Robert Jones for an example. Robert might have applied for his car under Robert Jones, and the next loan he got a house, but he used Bob Jones, maybe Robbie Jones. So he's using different names. So by using of the different names, the information might not be exactly the same. And lenders report their information at different times. So remember, reports are updated about every 30 days. That's not guaranteed because, say, Together Credit Union, we send our information out to the bureaus every 30 days on whether you made your payment or not. But maybe a bank or another lender, a mortgage provider, they might not send that out every 30 days. They might wait 60 or 90 days to report that. So everybody reports differently. So that variation in time could have an effect on your credit score as well of on the Bureau of your credit history. It might have an effect on their work, and it might not match up. So as we go along, I should mention, if you have any questions, please type them in. We do have about a 10-second delay for the Facebook Live. So if you ask it, you don't feel like we're addressing it really quickly, we will get to it, I promise. But just make sure you're typing those in as we go on. And just remember, those bureaus are going to record and keep that information stored in different ways. So here's the best part of this whole presentation is breaking down these credit scores. The other question I always get is, how is your credit score calculated? Well, remember what your credit score is. Your credit score is just going to measure the likelihood that you're going to pay back the money that you borrowed. Really, your credit score is just your risk factor for the lender. How risky is it to lend to you? So the higher your score is, the lower risk you're taking on. The lower your score is, the higher risk that the lender is taking on. Your scores are going to range from 300 to 850. I have been in the credit union business for 15 years now, and the first 6 of those years I worked as a teller. I did loans, new accounts, IRA, CDs, name it, I did it. When I was doing loans and taking the applications, the highest credit score I ever saw was an 820. I kind of feel like the 850 is completely unachievable, but I'm certain somebody out there has had to hit it at some point. But his credit, when I pulled it, was immaculate. He had never missed a payment. He had the different types of credit. He had everything out there that he was supposed to, and he had an excellent score. The worst score I've ever seen is probably like a 403. And that credit, the history was very long. There was every collection. There was a bankruptcy, foreclosures, repossessions, you name it. It was on this credit report. I don't think they ever made a payment on time in their whole history. So that's your varying factors. So when it comes to them determining your credit score at the bureaus, how they determine this, there's 5 factors. It is your payment history, your amount owed, your length of credit history, your new credit, and then your credit mix. So I'm going to take the time and we're going to break down these different 5 factors really quick. So number 1 is your payment history. This accounts for 35% of your score. This is the biggest factor going into your score. It is as simple as, did you make your payment on time? If you're making your payments on time every single month, your credit score should be decent. The single biggest negative factor on your credit report is a missed payment, a delinquency, a collection, anything like that. So it is so important that you make your payments on time. And we know life happens, right? Look at right now, we're in the middle of this pandemic. We're starting to come out of it a little bit, hopefully, fingers crossed. But life happens. Life throws us curveballs. A lot of us have been furloughed. Some of us have been laid off. Some of us have lost our jobs. There's going to be months where we can't make the payments. My husband, for instance, he did get furloughed from a job. We've had issues with unemployment. So there's times where we're having to reach out to our lenders to say, hey, this month's really tight. I can pay this much. And we're looking for extensions and we're looking for modifications. But you have to stay in contact with that lender to let them know, like, hey, I can't make this payment this month. This is what's going on. I'm so sorry. And see how they can help you. And right now, a lot of lenders have a lot of great programs out there to help their members and help their borrowers get through those months because they understand things are tight. And not even when we're in a pandemic, when things were normal, you just have to reach out. They can't help you if they don't know what's going on. But it's so crucial to make those payments on time. And then your amounts owed, that accounts for 30% of your credit score. So your amount owed, the big factor in here is your debt to income ratio. So you probably hear us when you're doing a loan application, you probably hear us a lot on that. Or if you've ever been declined for a loan, that you get the excuse of your D to I is too high, your debt to income is too high. Well, what does that mean? So your debt to income ratio is simply how much money you earn versus how much you have in payments. So you can add up your monthly income, you can add up all your debt, you can divide that your debt with your income, and you'll get a percentage, and that's your debt to income ratio. My current debt to income ratio is 27%. Ideally, you want to keep this under 50% because the higher your debt to income ratio is a red flag on if you're going to be able to make those payments or not, if you're going to be able to afford those. So you want to make sure you don't overextend yourself. You know what your debt to income ratio is and that you can afford to take on this new debt. So that's your amount owed. And they also take into effect all of your debt accounts and how much you owe as a total of all those accounts as well. So the biggest negative factor on this one is your D to I is too high. Your debt to income is over the 50%, so that's too high. And so you're not going to be able to afford those payments. We want to really keep that under the 50%. The next one, so really quick, just think about the first two items I've talked about here are 2/3 of your credit score. It is 65% of what goes in your credit score are those two items. So if you make your payments on time and you keep a lower debt to income and you stay up with how much you can afford to make sure you can afford those debts, you're on a good track already. So the next one is the length of credit history, and that accounts for 15% of your score. And on this one, they're going to take your newest account that you open, your oldest account you open, and the average of all your accounts. So if you're just starting out, a short credit history is really not going to hurt you, but it doesn't help you out in the best way either. They're not going to put, a creditor is not going to put much stock in you if you have a couple months or a newer credit history, say like 3 years, as somebody that's been paying on something for, they've had a 20-year credit history. So when you first start off, it's a little tricky. It's that vicious cycle of, well, we can't lend to you because you don't have credit, but how do I get credit if you won't let me borrow money? So that's when that vicious cycle kind of starts off, and that's where you have to start getting over that hump of, and we'll talk about that a little bit, how you can get that, start to get that credit rating going. So that's your length of credit history. So your scores can take that oldest, your newest, and the average of all your accounts. So I look today at my credit history to see my oldest account is 7 years. My newest account was 8 months, and the average of all my accounts was like 3 years and 11 months. So I looked at that today. So that has a medium impact on my score. So doesn't hurt me, but I could be doing better with that. And that's just because I've closed out accounts and stuff over the years. So the fourth one is new credit. That's going to account for 10% of your credit score. So new credit, this is where we're going to talk about, you've always heard that myth of every time I pull my credit, my score is going to drop. Well, it does and doesn't. So there's two types of credit pulls. We call them pulls. And we can say inquiry. So there's a hard inquiry and a soft inquiry. So when you do a hard inquiry on your credit report, that means that you're borrowing new money. So that means you're at a lender, they're pulling your credit to see if you can get approved for this new loan. So you're taking on new debt. A soft pull, however, is if you are a new employee at a job and they're doing a background check, they'll do a soft pull. They're just viewing your history. You're not taking on that new debt. If you're moving into an apartment, or if you pull it just to read your history, those are soft pulls. So anytime you want to check your credit history, that's a soft pull. It will not affect your score. The only time it affects your score is when you do a hard pull. And for it to affect your score doing a hard pull, you have to start pulling, you have to do credit pulls like crazy. So you say one day you go on the shopping spree, you got a new car, and then you decided you wanted new furniture for your house, and oh, hey, we need to get new appliances, and you wanted that new TV, and you finance everything. So you're opening account after account after account. That's when it's going to have that negative effect on your score. And also it's going to throw up some red flags, because now we're wondering, is this a case of identity theft? Is this really you? So then you're going to have those red flags are going to start hitting on there too. So when you start doing immediate pulls and start borrowing money left and right, and you go on this big shopping spree, that's when it's going to start dinging your account. So when you want to borrow money, make sure that you have a plan in place that I'm going to buy a car this month, and a couple months later, I'm going to buy the furniture, or we're going to do, if I get my furniture and appliances, it's going to come from the same place. We're going to finance it from the same place. Now, I will say if you are shopping for a house or a car and you apply at loans at different dealerships or different credit unions and banks, they're going to see that pattern. So they're going to know that you're kind of shopping around, so it won't affect your score as much. And do we have any questions? Okay, Maria wants to know if you have a derogatory mark on your credit, what is the best course of action? Kind of curious on what kind of derogatory mark specifically you're talking about. If it's a missed payment, you need to make sure you're in touch with your lender, tell them what's going on, and see if you can get that worked out. If you have something you want to dispute that you don't feel like is correct on there, you can reach out to Experian, TransUnion, or Equifax, and you can file a dispute with them or reach out to them, and they can give you more information on that. Maria? Marla, I'm sorry, Marla. I can't read tonight. A collection. I would reach out to the credit bureaus, see if they can give you more information on that collection, whether it's medical or just something else that you had on there. And they can give you that information so you can start working with that, maybe contact that collection agency, see what it is, and start working through that. If you've already paid off that collection, it's still appearing up, then you can work with the credit bureaus to dispute that and show them the proof that you've paid that, and they'll work with you to get that taken off your report. But just be patient with them. It will take a little bit of time. And then the fifth part of our credit score is our credit mix, and that accounts for 10% also. And your credit mix is when you're trying to build up this good credit rating, you want to have a different mix of credit types. So the two main types are revolving and installment. So your revolving loans, those are your credit cards. Those are the ones that they have a limit, but you can keep paying down the balance, and the only way they close out is if you close them out. And then you have your installment loans, that's your mortgages, your student loans, your auto loans. Those are the ones that you have a set term to the loan. You borrow $20,000 for 5 years for a car. After you pay that car off over that 60-month term, that 5-year term, that just closes out. So they really want to see you have at least one revolving and one installment loan on your credit history. Got one more question real quick coming in. Does my income or collecting unemployment affect my score? And that is from Molly. Molly, no, that will not affect your score at all. So thank you for the questions, guys. Keep them coming. So we're going to move on. And now it's reading your credit report. So if you didn't know, you're entitled to get one free credit report per year through the government. It's free. It's annualcreditreport.com, and Kayla will go back over that with you in just a little bit. Unfortunately, anymore, they don't include your score, but it includes your full history, and that's important. You want to make sure you're checking that at least once a year, because you want to make sure that your identifying information is correct on there, your name, your address, your social, all that information is up to date. You want to go through that credit history. I'll tell you a quick story. One time I was doing an auto loan for a person. Unfortunately, the request came back as denied. When we told him why it was denied, that his debt to income was too high and that he had missed payments on this loan, so his payment history wasn't good, he was very confused. So we let him look through his credit history, and we started going through. We itemized it for him. Well, then we found out somebody had stolen his identity in California and went out and bought a BMW fully loaded convertible, and he had no idea. So when we asked about it, he had no idea. So then we had to contact the bureaus. He had to get a freeze on all of his credit history. He had to go to the police. He had to file a report to the police. So somebody went out and bought this really expensive vehicle and didn't bother to pay for it, all under his name. So that's some scary stuff right there. But that's why it's important that you're checking to make sure that credit history is yours. And if you go through it and you find anything that you don't remember, or it doesn't look like you did it, or it's not right, you need to be in contact with those bureaus, and you need to file a dispute. So they're going to have you write in a claim, and you're going to put in that dispute why you think it's wrong, why you believe it's incorrect information and any kind of proof you have with that, and they're going to start working with you to get that off. And then if there is a case of identity theft, they're going to start freezing that those reports for you. There's going to be special things you have to do whenever you borrow money. After that, they're going to red flag it, and then you can work with your local police agency to file a police report on that as well. But you also want to check your collection accounts, medical collections. I see so many medical collections on reports, and most people don't even realize that they have them. In the medical world, it might be maybe they just didn't get the invoice. We know how medical collections can be. They appear out of nowhere. So you may want to make sure about those, or if you do have any collection accounts on there, that you do know what they are. If not, you need to be in contact with those bureaus to get more information on those so you can get those rectified. Any public records, and make sure you check those inquiries. Who's been pulling your credit? Is that all you, or do you see something kind of weird on there? So remember, that prevents identity theft. You're making sure your score is accurate to what you believe it should be or in that area. And you can also check on your progress. So if you're trying to raise your score, you can see how you're doing. So then real quick, we're going to get into establishing your credit. So we like to go over this a lot with our young adult groups at colleges and high schools and stuff. So when you're starting off, but even if you're trying to reestablish, some steps you can take. So you want to start a credit file. The best way to do that is to take on some debt. So I know some of our youngsters are a little bit kind of apprehensive about taking on debt. Maybe they've had bad experiences, they've heard bad stories with it. Don't be afraid. It's a good thing. So we just want to go over some quick rules of credit. And those rules are just when you borrow that credit, make sure you can afford to pay it. Don't overextend yourself. Don't borrow any more money than you can take on. You want to make sure you're paying off those balances every month. You're making those payments on time. If you have a credit card, pay off that balance every single month. If you can't afford to pay off that balance every month, at least make as much of a payment as you can. If you can only afford the minimum payment, at least pay the minimum payment. Make sure you are, hold on, I can't read the tiny print there. Don't use your credit card to pay off other credit cards. My biggest pet peeve, and it's a horrible cycle to get into. I've seen people where they've gotten in really bad financial situations before, and they'll take credit card A to pay off credit card B in month 1, and in month 2, they'll take credit card B to pay off credit card A to make the payments, and they just keep reversing because that's the only way they can do it. And it is so hard to get out of that cycle. And make sure you're using your credit wisely for your needs. So if you have a credit card, just because you have a $5,000 limit does not mean you need to go out on shopping spree and spend $5,000. I love a good retail therapy day as much as everybody else, but you got to make sure it's within your budget and that you can afford what you're doing. So how I started my credit file is I obtained what was called a secured credit card. A lot of banks and credit unions offer them. Together Credit Union does offer them for great rates. So what that is I got a $500 limit on my credit card, and in return, I had to put up $600 from my savings account into a CD, and that was my collateral. So if I didn't make my payments, they would use the money from the CD to pay off my credit card. I had that for 1 year, and I went with like a 300 credit score starting off up to like a B level, so it was pretty good. And then the next year, I decided I was going to take out a personal loan to buy new tires for my car, even though I had the money in my savings account. So I took out a $1,000 personal loan, and I paid on that over a year to help maintain it. So that's always an option too. So if you do obtain a retail credit card, because there's thousands of them out there, and we all know we get bombarded weekly. If you're a college student, Discovery is going to send you 5 offers a week at least, minimum. You don't have to sign up for them all. Make sure you do your homework. Check those interest rates. Some of them can be upwards of 30, 35% on those. They're ridiculous on the interest rates, 20%. I think I have a Target Red Card because I'm a Target shopaholic, self-admitted. I like my 5% off on my purchases, but the interest rate is like 28%, and it's ridiculous. So I make sure I pay that off every single month. So just be smart about that. So because you don't want to have 20 credit cards. Think about it. If you have 20 credit cards, you max them all out, it's going to be really hard to get out of that debt. And another option is you can always get a co-signer. That's what my sister did. She was in college and she wanted to start her credit file. So she got a small personal loan with my mom as a co-signer to help get her established with the credit. And it worked really well for her. Just remember, when you get a co-signer, you want it to be somebody that you trust. And remember that the credit bureaus, if you're joint on a loan or a cosigner, it scores you guys equally. So if you don't make that payment, say you borrowed money with your grandma for a college debt and you decided not to make that payment, it's not affecting just your score, it's now affecting your grandmother's score too. So if you make the payments on time, it affects you positively. If you don't, it affects you both negatively. So just please remember that and be wise with that. And that's it for me. I'm going to bring in Kayla. She's going to talk about some wonderful resources. Please keep sending in those questions if you have them. We'd love to answer them. And I'll hand it over to her. There you go.
Hi everyone, I'm going to talk to you about GreenPath Financial Wellness. Together, Credit Union has partnered with GreenPath Financial Wellness to offer our members certified financial counseling, debt management services, as well as just a multitude of different financial tools for you guys. GreenPath Financial Wellness offers more than the standard debt management plans with a multitude of resources that are online. Also find those certified financial counselors, and they're there to really help you to achieve those financial goals, help build your credit, manage your debt, and really just plan for the future. You know, if you're in that transition of maybe you're getting married soon, you're combining finances for the first time, that's a wonderful time to reach out to GreenPath Financial Wellness. All it takes to get started is just a simple phone call to a certified financial counselor. You and that counselor are going to go through what your current financial situation is, as well as what your financial goals are. Or again, if you're getting married, if your financial situation is changing, what that new platform for your finances looks like. After that conversation, the counselor is going to provide you either with general guidance, a budget, or a financial recovery plan. So whether it is just simply you're wanting help with your family budget, or if you're even asking and wanting guidance on the home buying process, GreenPath Financial Wellness offers all that information for our members for free. Everything that you need to get started and to make that initial phone call to GreenPath Financial Wellness can be found on our credit union's website. And as I'm talking about credit union resources, I'm going to jump to the next slide here. And this is just going to go over all the different resources that we have for our members. As Tracy mentioned, that free annual creditreport.com, here is a direct link there. And just as a reminder, you're wanting to use this as a tool to just really review that credit history, make sure you don't have any identity theft, and if you do want to actually see your score, you can pay for that score. Moving down the line here for online access, this is our resource that helps our members manage their money. There's a great tool within our online access that actually outlines a budget for you. It takes your most frequently itemized purchases and expenses and categorizes them for you. So this is a great tool to use to see if, hey, maybe I'm going out to eat too much. Maybe I can start saving more money in my entertainment category that I can go on a vacation next year. It really just, if you don't have that budget established, it's really going to be that tool to help you with that. The next one is our financial wellness modules and calculators. So on our website, you're going to find all different kinds of resources to help you with any type of financial situation you're looking for. This could be if you're planning for retirement, if you're trying to save for college, even seeing if you should refinance, what type of loan you need to take out. We have all the different resources. These can be in blog posts, videos, all different types of resources, as well as those calculators to see what your new payments might be. And then our final resource, again, is that GreenPath Financial Wellness that I talked about. There's a direct link right on our website to that. So if you did not register for this seminar, but you would like the resources and this presentation, please go ahead and put your information in the comments or feel free to direct message us, and we are very happy to send you all these resources, as well as additional documentation on that credit score process and also more information on GreenPath Financial Wellness. If you would like to reach out directly to either Tracy or myself with any direct questions that you have, here is our contact information. I do want to thank you for joining us this evening. So we're going to open it up to questions now. We're going to bring Tracy back in as well. Okay, so the question here was that GreenPath Financial Counseling, are they going to give you those really tips and tricks to increase your credit score? Absolutely. That is one of the main things that GreenPath Financial Wellness does. Also, if you want to reach out to Tracy and I directly, we can definitely go into more detail. This is just a 30-minute general overview of the credit score process. There's lots of more information out there that we can provide you with.
So I feel like my credit score is stuck. That's what Miss Kim is saying. And she wants to know if there's an easy or quick way to bump up my credit score. A lot of times, if you want to do a quick bump on your credit score, if you pay down some balances, that'll help lower that debt to income ratio. So you can start with maybe a lower debt that you have that you can easily pay off, and that should help lower. That's what I get yelled at all the time is if you lower the balance of this credit card, your credit score would go up. So take that into consideration and try to lower some of those balances that you have. And Molly wants to know if you have medical collections, how much does it count against you? And is it critical to get it paid off when you're trying to buy a house, etc., and still appealing with insurance? It depends on the amount, Molly, of the medical collections. My husband had one on his account he's probably still on there for years. It was $250. And actually, when we applied for our first house, they told us not to even worry about it. It really didn't affect him too much. But if you have debt that's in there and then thousands, tens of thousands, hundreds of thousands, that's really going to impact your score. And that's really going to make it, it'll be difficult to get approved for a mortgage. Just let the lender know that, hey, I know this is on here. Here's what I'm working. They might have you bring in some documentation to show that you're working with them, because we know how those disputes go. They can take forever, especially with the billing part of it. So make sure you're just honest with them and show them what you're doing and be retroactive on trying to get that corrected. And Miss Pierre wants to know, hi Pierre, she wants to know if we'll be doing additional workshops. Yes, Kayla and I will be back. We do definitely have one. Sorry, we got like an office moment going on here. Dwight. Hit the button. There we go. Okay, sorry. I'm an office nerd, so Dwight Schrute putting in those motion sensors. Hi, lights are back on. Yes, we do have additional workshops scheduled. Kayla and I will be back. We are going to have some recording sessions going on hopefully soon with our production manager, Kim. One will be entitled 4 Steps to Strengthening Your Finances. We hope to have that out in the next month or two. We will have a Facebook Live on August 8th with our business specialist, Lisa Morgan, and she'll be going over small business accounts. And we have lots of stuff up our sleeves for the upcoming month. So just keep an eye out for the next seminars. Okay, and just one last quick thing. Our production manager, Kim, is now posting a link to a Survey Monkey. Kayla and I want to know how we did tonight. We take our surveys very seriously. If you didn't like us, please be honest with us. We can take it. If you loved us, let us know that you love us. We love compliments too. But let us know how we did, how we can make improvements, and most importantly, did you learn anything from us tonight? We sure hope you did. And if you have any topics you want to see us do, please put them in there, because we're always looking for new topic ideas. But with that, do we have any other questions coming in? So thank you again for joining us this evening, rainy Tuesday evening. And we will see you all real soon, I hope. Everybody, please stay safe and healthy, and have a spectacular 4th of July weekend.
Bye, everyone. Thanks for joining us.